Hi, this is Alan Smith coming from you from Southwest Florida at www.livinginswflorida.com. I can be reached at 239-989-1106 with all your real estate questions and needs. Today I'd like to answer some questions about 1031 tax exchanges. We're getting close to that time of year where everybody's starting to possibly think about buying a great vacation home, rental home, that sort of thing down here in Southwest Florida, and 1031 exchanges always seem to come up. So since I'm an expert in 1031 tax exchanges, I'd like to give you a little bit of information on how exactly 1031 exchanges work. So, let's get started. The key questions and answers about 1031 exchanges are fairly simple, and I've prepared some for you. We'll go over them today. When selling a principal residence, qualified homeowners are allowed to take up to $500,000 in profits tax-free. But what if you want to sell an investment property? Rather than pay taxes on the profits from that sale, you can defer the taxation by exchanging a qualified property for another like-kind property. It's called a 1031 exchange, named after the Internal Revenue Code, Section 1031. You may also hear it referred to as a tax-deferred exchange. Some people use that, that phrase. This brief report that I'm going to go over with you summarizes some of the basics involved in a tax-deferred property exchange. Due to the complexities, I can hardly talk this today, and possible tax consequences of this type of transaction, I want you to know to be sure to consult a tax professional and or a real estate attorney before attempting to execute a 1031 exchange. However, I'm more than happy to have you give me a call and we can go over them the best we can from there. So question number one, can I simply sell one property and buy another? The answer to that, simply no. To reap the tax break, there must be an exchange, not just a sale and a purchase of otherwise qualified properties. The exchange must be properly executed through an exchange agreement serviced by a qualified intermediary, according to a specific process and a timetable defined by the tax code. We have people in place that act as that intermediary person. Essentially, you take your property sale and you put those proceeds into the intermediary, and the same with your purchase, and he puts the two together. You never take possession of the check or the proceeds. If you take possession of the check or the proceeds, you can't do a 1031 exchange. So that brings us to this question. What is a qualified intermediary? Sometimes called a facilitator or an I can't even pronounce it, but somebody who, accommodator, I guess you would call it. A qualified intermediary functions as a middle person between you and the buyers and the sellers of the properties involved, kind of an intermediate person. Because you're not allowed to take physical possession or constructive receipt of the proceeds of the sale of your old property, that's the one you sold, the intermediary holds all the cash from the exchange until the transfer to the seller of the replacement property. The facilitator then works with the acquisition and transfer of the properties. He provides documentation to ensure that the exchange meets all the tax code requirements. Your exchange agreement with that facilitator limits access to the proceeds during the exchange and may stipulate other services provided for the agreed upon fee. The administrator also is an independent third party to the exchange. Neither you, the buyer, or the seller can serve as the intermediary in exchange, nor can anyone who was in the previous 2 years has been your employee, your attorney, your accountant, investment banker, or your real estate agent or broker can also prevent this. So you need to have a completely separate third-party people. There are people that do this as a profession, and as I said, we have them lined up for you, so no worries, got that handled. Be aware there are no licensing requirements for facilitators, and the industry is largely unregulated. Because the administrator is entrusted to hold all of the funds involved in your 1031 exchange, it's important that you select one that is reputable, experienced, financially sound, and bonded. We use attorneys here in town or 1031 facilitators. There's 2 or 3 of them here in the Southwest Florida region. That's all they do. They're very well respected and known in their field, and we would only trust your services with the best in the business, just like us. So we've got that handled for you too. Now you ask, what types of properties can be exchanged? Well, real estate qualifies for tax-deferred exchange includes improved or unimproved property held for income, investment, or business purposes. But the old relinquished property and the new replacement property would have to fall within that definition for the transaction to be qualified like-kind exchange. You could, for example, exchange unimproved land for an improved property you intend to use in investment or for your business, but not as your residence. Or you could exchange ownership of one qualified property for ownership of multiple like-kind properties and vice versa. A number of possibilities are available, as are a variety of limitations, as you could possibly imagine. So give me a call. I can show you the ins and the outs of that. And you may be wondering, can I take some money out of the transaction by investing in a property of lower value? To have a valid tax-deferred exchange, you must exchange the old property for a property of equal to or greater value. If at the conclusion of the transaction you receive any cash equivalents, or non-like-kind property, you will owe capital gains taxes. Also note that a 1031 exchange only defers taxation until such times as you sell the replacement property and take the money. In other words, you defer the taxes from the home you sold now into the new home you're buying, but that when you sell that second home that you're buying now, say you sell it in 5 years, then you will pay taxes on it. You're just deferring the tax to later. Is there more than one way to exchange, to structure a 1031 exchange? Well, there are 4 basic types of real estate property exchanges, each conducted according to the timetables and the rules outlined by the IRS and Treasury codes. There are simultaneous exchanges. This occurs when both your old property and your new property go to the closing on the same day. That's pretty straightforward. There's a delay exchange where the settlement is non-simultaneous, with closing the old property occurring on a different day before the closing on the replacement property. With delayed closings and exchanges, strict timing requirements must be adhered to. You must close on or formally identify the property that you want to buy within 45 calendar days of closing on the old property. So you close on your first one, you have 45 days to identify. You don't have to close it in 45 days, but you have to identify it within 45 days on the replacement property. And you have 2 other deadlines, whichever is earlier, within 180 calendar days of the transfer of the old property, or by the due date of the income tax return for the tax year during which the old property was closed. A number of other requirements do apply to the delayed exchange process, so be sure to discuss them with a property tax advisor or a 1031 exchange specialist. You have parking arrangements. There are 2 types: reverse exchanges. Your replacement property that you're doing is closed before you find a buyer for your relinquished property, or your improvement exchange. You make improvements to a new or existing replacement property, investing the exchange proceeds under the safe harbor rules. You must complete these non-simultaneous exchanges within 180 calendar days of title transfer. So that gives you a little bit of idea. Again, consult your qualified tax and legal advisors for all details involving improved exchanges. So then, finally, the last question: can a real estate pro like myself help me conduct a 1031 exchange? And the answer is absolutely yes. As discussed earlier, a real estate professional like myself who has served you professionally within 2 years prior to the exchange agreement is disqualified from serving as an administrator in your 1031 exchange. However, I can still help you with the real estate process behind it, just not act as the administrator, which I don't do anyway. Where we can be most help in helping you is to identify the buyers for the property you want to sell and helping you locate qualified like-minded replacement property. In other words, helping you sell your property, helping you locate the one that you're going to buy, negotiating it, getting you the best deals on both selling and buying. In other words, acting as a real estate professional, not a tax professional. Especially if you're considering a delayed or a reverse exchange, you'll want to have experienced, well-networked professionals like us on your side, helping you meet the 45-day identification and the 180-day exchange period deadlines. Knowing how a 1031 exchanges work, we'll dedicate ourselves into ensuring you that your investment property sale and purchase will come off totally smoothly and tax deferred, which after all is what you want. So please feel free to call us at 239-989-1106 and go over all your questions that may have to do with 1031 tax deferred exchanges. Let me ask you go over a few frequently asked questions. Number one, do I use a real estate professional in 1031 exchange? The answer is yes. Most owners use an agent to list their old property for sale and use a buyer's agent, which I've gone over buyer brokerage before, to help you find that replacement property to buy. Are my buyer's old property and the seller, the replacement property, involved as part of the exchange? The answer to that is no. Only you and your qualified intermediary are directly involved in the exchange. To the buyer and seller, their transactions are handled traditionally. And finally, is it best to line up both ends of the exchange, a buyer for my old property and a replacement property to buy, before I begin? Yes, it's always a great idea to be ready to complete both sides of the exchange to meet the 1031 time limits. But it's, of course, not required, and we've gone over how to do the delayed exchange just a little bit ago. But as a real estate professionals, we can help you coordinate both transactions to help them occur simultaneously, or to get you through the delayed situation if one's going to close a little earlier than the other. It's really not that big of a deal. Obviously, it's nice if they do close simultaneously, but it's not one of those have-to-do things. Well, I hope I've answered some of your questions that have to do with 1031 exchanges. I know I went over this fairly quickly for you, but I hope that I blessed you with some information that will help you make a big decision a lot simpler, a confusing information a lot more clear. But if you have additional questions, give me a call, 239-989-1106. I'll be more than happy to get you pointed in the right direction. And more importantly, I look forward to taking a look at the property that you want to sell and get sold, and also assisting you to find that perfect property as an exchange to get you moved into that other home and put the two transactions together and close them as smooth as it can possibly be. We look at ourselves as we're the airplane pilot to your destination, and our whole goal is to make your trip as smooth and turbulence-free as we possibly can. Well, this is Alan Smith, and it's been a pleasure sharing this with you. I look forward to meeting you in person or speaking with you on the phone. You have a wonderful day. From Southwest Florida, Alan Smith. Bye-bye now.